The Central Bank of Nigeria, CBN, has announced that it will maintain its ways and means advances to the federal government at a 5% limit for the fiscal years 2024 to 2025, as outlined in its recently released monetary, credit, foreign trade, and exchange policy guidelines. This decision contrasts with a National Assembly bill that raised the maximum borrowing limit from 5% to 10%. According to the CBN guidelines, the bank will continue to provide advances of up to 5% of the previous year's actual collected revenue to be repaid within the fiscal year to avoid long-term fiscal burden. Joining me for more on this is Muktar Mohammed, CEO, Assure Investment Limited. Thank you, Muktar, for joining me today.
Good morning.
Right. Well, I bet this is music to your ears, but I'm just a bit curious to know if this overrules the National Assembly's bill, and maybe you also tell us who that decision sort of rests with.
Well, it doesn't overrule the National Assembly bill. The National Assembly bill has not been passed to law, so we're waiting for that to be passed to law. And if the president passes it to law, then the CBN will have no option than to do what has been stated in the law. But for now, I think the CBN is standing with the 5%, which has always been what it is. It's in the place of the CBN to implement whatever the legislation have done. So I don't think there's any issue with that for now.
Right. Now, in the document released by the CBN, it highlighted that ways and means advances would now be determined after recognizing the sub-accounts of the various MDAs, which are now linked to the Consolidated Revenue Fund, to arrive at the FGN consolidated cash position. What do you make of this?
I think it's a good move. Just like you said in your introduction, it's just like if you go to the bank, you want to borrow money from the bank, they have to look at your inflow and outflow, expected revenue. What has been your revenue for some time? Will you be able to pay the loan? That's what the CBN is trying to apply this time around. It's going to look at the revenue from this consolidated account. It's going to look at the inflow from the MDAs. And then through that, it's going to determine whether the government really should collect this loan and if they have the capacity to pay. I think that's basically just a check and balance to make sure that these loans are collected and, like you said in your report, must be paid at the financial year so that they avoid these long-time loan issues that drag on, and then sometimes you have the government not paying, then they now apply for more of that time. So I think they are trying to get against that. So they look at your revenue, will you be able to pay within the speculative financial year? That will determine whether you get the loan.
Well, apart from maintaining the 5% limit and the change in determining how much the federal government can't borrow, are there other measures that can punish or deter successive governments and even CBN management from repeating what the Buhari administration did? Because, I mean, this law specifically spelled out some of those things even before now, but yet they were not followed.
Like we keep saying, in Nigeria, you build strong men instead of strong institutions. If you have a strong institution, you don't need, Perpetual can go in there and become the CBN governor and then be able to drive the policy because there's an institution that's there to guide it. Or her. So what it does is that you just have to improve upon what you've seen there. But what we've seen in Nigeria for a long time is we see strong men come in and then implement this policy. Then we see weak men come in and go against this policy. Now with Cardoso, everybody has known him. They say he was a strict disciplinarian, he's the headmaster. He makes sure rules are followed. But with Emefiele, he didn't follow the rules, and we were just giving money to the government for projects that were not economic variable, and you don't have the capacity to pay. So I for one think that we should tend to build a very strong, robust institution whereby it's also there, and then there's check and balance that is supposed to come from the National Assembly too, because they also passed this law. So if you say it's 5%, it's 5%, then the modality set up by CBN must be followed. So my challenge is whoever is there, he will have the political will or the capability to be able to implement? Can he look at the federal government in the eyes and say, you know what, you can't get this loan because you've not been able to pay, you've exceeded your borrowing limits. That is what we are looking for punishment. And I think punishment is one. If the federal government has to do that, there should be a cover. Maybe they will not be able to assess ways and means for the next 5 years, for the next 4 years. And whoever the management team are, they should also come. There should also be a punishment for them that will deter them from doing it. And then if you have a new management team, they look at those punishments. They don't want to damage their career. They don't want to spoil their career. They will not be saying, look, this is what is stated. I don't want to lose my career. So it's basically all about check and balances. And remember that the legislators are the one to do the check and balancing. But now what you have is a rubber stamp National Assembly that endorse whatever comes from the presidency without even looking at reality on ground.
Well, yeah, I mean, you definitely have to prove that particular last statement you made about them being a rubber stamp assembly. But away from that, experts believe that the large amount doled out during the previous administration contributed to the high inflation rate and increased money speculation, in the economy. You have also shared the same sentiment, I remember, in our past interviews. However, in August, the NBS reported Nigeria's inflation to have eased to 32.15%. I mean, I have heard some analysts say maybe the NBS needs to share its note on basket's weight, with Nigeria, and so they can be on the same page. What are your thoughts?
Well, I agree. They'll have to share. But again, you have to look at the kind of intervention that's happened. Maybe that's why we've seen this downward trend in inflationary pressure. And this intervention also have happened in the area of state government. A state like Lagos State have a market that's more or less like a government control market, whereby you go there, you get products for cheap. Perpetual, a lady some time ago, I was speaking to some of them, and they said that the basket of tomatoes has come down for some time also. This was reported also. So then you look at one ingredient that Nigerians always love, rice, and government is subsidizing that by you can buy a bag of rice that goes for almost 90 to 100,000 for just 40,000. All these are social intervention that I think has really helped in seeing the kind of reduction that we have seen, especially in food inflation, because again, you can't say it has gone down because we still have about 37% still there. But again, it's work in progress. And remember that also we've not even started the implementation of this of the removal of tariff from household items, because the customs say they are still waiting for the Federal Ministry of Finance to submit those things. So if they do that, then you definitely see that inflation will come down, because largely what is driving inflation in Nigeria is the monetary side in terms of liquidity, in terms of FX liquidity, because most of the product that comes into this country are imported into this country. They have to source for the FX, and it has not been easy sourcing for FX. So it's all about availability. So yes, I agree, they must share their note, but you could see pocket of success here and there, especially in the area where the state government have decided to intervene, especially for food security.
Right, now let's talk about this. Nigeria's economic managers have said at various times that it will prevent excessive borrowing and ensure that past loans are repaid before new advances are made. They've said a lot of all of this. But so far, would you say they have kept these promises? Because we're hearing about another loan.
But they have not kept their promises. You and I know that if you look at debt servicing, it has actually increased. And I remember when the minister came, the minister said that we will not be having, they won't be borrowing. They make sure that they try to pay up the ways and means. By doing that, also they have to pay through using coupon, which I think they said they were going to use to make sure that they are able to pay. So for me, I think government has not really kept to that. But again, it depends on their project. They have to make sure that their projects are running and the fund is not there. Exchange rate also has gone up. That's one. Then secondly, again, crude oil target has not been met. In the budget is 1.7 million barrel per day. What we're still doing 1.33 million barrel per day. So that is affecting the revenue from that side also. So it's for me, it's a challenge. It's a challenge, but it's a challenge that could be resolved by the government.
Right. You said it's a challenge that could be resolved by the government. Is that you saying that from where we are, maybe it's sort of sustainable? Is that what you're saying?
No, I'm not thinking. I don't think that is it's sort of sustainable, especially when you look at government revenue. Like I just told you, 1.7 million barrel per day. We're not meeting crude oil price and $5 per barrel. Oh, that is good. But again, we are not meeting that because we are not meeting our term of we're not meeting our target. So definitely revenue is not there. So borrowing, this government have pride themselves that they will not borrow again. But again, sometimes you say something, then when you get in there, things normally just change. I think what the government should do is the PPP, public-private partnership, Once you don't have fund, that's what a lot of governments are doing all over the world. You don't have fund, then you set up those projects, you give it to the private sector, they build and operate to recoup their money. So you government, you are not bringing out from your scarce resources. I think that's one area that Nigerian government have not really keyed into. I think they should key in, especially when you have scarce resources like this. Yes, we've seen success in the non-oil sector in terms of export, but again, it's not commensurate with bringing effects into the Nigerian economy to create stability, and with that stability come more investment into the country. Then that will help also build the reserve. But for now, we are not seeing that.
Right. So finally, in the 218-page document released by the CBN, it highlighted challenges likely to be faced in the fiscal year. It noted that fuel subsidy removal. I mean, talking about fuel subsidy removal, I have my doubts. There's a lot to say about it, but I'll probably wait for my next guest who'll be talking about oil and gas, right? Lower import bills and increased external debt servicing obligations, saying these things could actually pose downside risks for the growth of external reserves by 2024-2025. What are your thoughts and probable solutions?
Yeah, I think I tell you, because I'm not to talk about that, but when you see fuel subsidy, they need to explain to us how that will affect, because definitely it's supposed to be a game changer. Government is no more paying subsidy, then you have to earn more, and that means what we earn, then we'll be able to say we'll build our reserve, and that's what the government said. Of the pressure, about 40% that is on the naira would have gone down, and that would bring down the exchange rate. So, but again, I know where they're coming from, because don't forget that we have the naira exchange deal between the Nigerian government and Dangote Refinery from October. Maybe that's what they are looking. And then they also have commitment, and then you still see that we have challenge in meeting our quota, like I said. So maybe that is the reason why they are saying fuel subsidy removal is going to affect it, because it's the removal then will also have a larger impact on the larger economy, which is more important than what you think you will have in terms of saving money that is not helping the economy. In terms of debt, I think I've said it, like I said the last time, I mean, I'm still saying it again. We need to look at, instead of spending so much money on debt, so you need to look at the PPP area, whereby both government and the private sector comes together to see how the private sector can run this project and then build and operate. And that's the best global practices. Then there have to be fiscal discipline. When we talk about fiscal discipline, we need to begin to see that government is not being wasteful in terms of allowances that are paid to political appointees, and also in terms of projects. If you look at the ways and means, why the National Assembly may be thinking of increasing the ways of means, it's just because they're looking at it as a way to increase more funding to the center, because they now realize the center doesn't have so much funding. For them to begin to put some projects that are in their own constituency, which I think that is lack of fiscal discipline, lack of discipline in the side. So we need to see how we can begin to maintain fiscal discipline. We mean that what is meant for this is meant for this, what is supposed to be used for this purpose is used for this purpose. And I think the CBN will need to come clear on that fuel subsidy. Is it because by this fuel subsidy we are not able to produce so much, and what we produce we are giving to Dangote, and what we are exporting is small, so we'll not have effects in our reserve? They need to come clear on that, because from where we stand, from what we've heard from both from government, from private sector, from a larger player, the removal of subsidy is going to be a game changer to help liberalize the Nigerian economy, help stabilize exchange rate, help create jobs, and most especially create more investment in the oil and gas sector. So they need to come clear on that.
Absolutely. Thank you, Muktar Mohammed, CEO, Asher Investments Limited, for your time and thoughts on Business Edge today. Thank you.
Thank you for having me.